whenever a new partner comes into a business, he brings in capital for his share in the profits of the business, and that capital belongs to the firm. In addition to his capital, he brings along his share of goodwill to compensate old partners for their sacrifice made in his favor. So now students, accounting treatment of goodwill is entirely governed by accounting standard 10. As per this accounting standard, the goodwill of the firm, or for matter any business, can be divided into two parts. That is, that purchased goodwill, that is the goodwill for which we have paid certain sum of money. It usually arises at the time of amalgamation or purchase of a new business. And the other part is valuation of goodwill if it is self-acquired or self-generated. Now students, accounting standard 10 makes it very clear, that is, self-generated goodwill should not be shown in the books of accounts. It should not be shown. So that means in case there is any goodwill appearing in the balance sheet of the partnership firm, then that must be removed from there, or if I say in accounting terms, it must be written off. So let us learn about accounting treatment of goodwill. The accounting treatment of goodwill is done in two different cases and in two different ways. First case is a situation when new partner brings his share of goodwill in cash. Some authors also use the name premium method to describe this case. So now students, when the new partner brings his goodwill in cash, remember again we are required to make journal entries here. Since the new partner is bringing in cash for goodwill, the entry would be bank in case he is getting through check, or cash debited to new partner's capital account and to premium. Capital represents his contribution towards the capital of the firm. Premium represents his share of goodwill, and in bank we will have total. Now students, whatever amount of premium that he has brought would be divided among the old partners, that is premium account debited to old partners. This division would be made in sacrificing ratio. That means you will always have to calculate sacrificing ratio first, and in case of premium it would be the same amount, that is his share of goodwill. Now students, remember old partners, by old partners when we are writing sacrificing ratio in front of it, that clearly means in case a partner has not sacrificed anything, then he will not get any share out of this premium. So below this I am actually mentioning that they are sacrificing partners. That is, only those partners out of the old partners who are actually sacrificing something in favor of new partner. Now remember, these are the entries for bringing in the goodwill by the new partner and division of that goodwill. Old partners sometime also withdraw a certain share of money out of this premium. That is mentioned in the question or is dependent upon case to case basis. So in case they withdraw certain sum of money, then we can always pass an additional entry, that is old partners capital account debited to cash or to bank, and the amount would be amount withdrawn. This is when partners withdraw goodwill. Remember students, it is not to be passed in every case. It is to be done only when it is mentioned in the question. Also, while you are attempting this question, you must always take care of one thing, that is, in case goodwill already appears in the balance sheet. That is, if goodwill is appearing in the balance sheet, then as per the accounting standard 10 that we had discussed just now, this amount of goodwill should always be written off. And remember, this goodwill would be written off by the old partners in their old ratio. So the entry would be old partners capital account debited to goodwill, and in goodwill we should always use full form, not GW for goodwill. It should be goodwill properly written. So goodwill, this is balance sheet value and in old ratio. Remember, this has to be written off in every and in almost any given situation. If you are not writing it off, it would actually be a violation of accounting standard 10 and is not acceptable. So in case goodwill mention is actually appearing in the balance sheet or the amount is mentioned, then you must write it off and then pass on the entries for division of goodwill. Another situation arises, that is when new partner is unable to bring any amount of cash for his share of goodwill. That is case 2, when new partner is unable to bring his share of goodwill in cash. Some authors use the name revaluation method for this case. Now students, in this case, again, remember, if goodwill is already appearing in the balance sheet, it has to be written off. Any existing goodwill in the balance sheet is to be written off, and that is clearly specified in accounting standard 10. Now, besides writing off, what are the journal entries? The first entry would be cash or bank debited to new partner's capital account. Now students, this will only be the amount of capital. Since he is not bringing any premium for goodwill, it will not be shown here. So the entry would be cash and bank to new partners capital. What about goodwill now? Since he is not bringing any goodwill, the old partners will take out their respective shares out of his capital. That means the new partner will still be compensating the old partners, but this compensation would be paid to them through his capital account. So the entry would be new partner's capital account debited to old partners. Again, only the sacrificing ones, his share of goodwill and in their sacrificing ratio. So now students, both the cases are clear before us. In case he brings goodwill in cash, that is premium will be divided among the old partners in sacrificing ratio. And in case he is unable to bring goodwill in cash, then also the old partners will take their share, but this share would be taken out of his capital account. Remember, if in case goodwill appears in the balance sheet, it has to be written off, and the entry would be old partners to goodwill. Old partners would be writing off that amount in their old profit sharing ratio. Let us take some examples to understand the treatment of goodwill.